So, let's talk about some interesting data points that have come for consumer good FMCG companies. Now, we do know that during the lockdown, companies had actually stopped offering trade margins to their retailers, and obviously this was due to the sales being quite low. They were also impacted by a lot of store closures during the lockdown period. Now, what is the interesting fact that is coming in? Obviously, with consumers coming out, operations coming back to normal levels, sales volumes are also coming back for companies. So now they have again started offering retailers margins, that is the trade margins, to boost the sales. Now this is, actually, if you see at such a point of time right now, the demand has been quite stagnant. Yes, we had seen a lot of in-home consumption and all increase in trades, but it was quite stagnant. So now, because of that, to boost this demand, this move is actually mainly for that. So there is some incentive for retailers also to actually go forward, make more sales. So that is coming in for retailers. Now overall, we do understand that consumer good companies are FMCG companies, consumer good companies are going to be focusing more on offering benefits to retailers and consumers. That is their main focus area, and this is especially coming in at a time when festive season is coming in, where consumers, customers will be going out, buying more things. So at such a time, surely this is likely to boost the sales of the company. Now overall, how are they going to actually fund this? Where will the money come from? Will this impact the margins? So as of now, we are not expecting an impact on the margins, because the companies have according to channel checks, have spoken that the marketing spends or the ad spends which the company were making, that's where they are looking to cut back, and that will be used to offer to margins to trade margins to retailers, as well as they'll be giving discounts, promotions to customers as well. So that's going to be something very interesting, so we may not see much of an impact on the margins or profitability of the company. Now overall, let's look at what are the trade margins for different segments or different categories that are given. Now this was to boost the sales. So for soaps, they have given a 3 to 4% increase in the trade margins, while in other personal categories we're expecting an increase of around 4 to 5% is what is said according to trade channels, and that's what the increase has been. Now GCPL has increased the margins on soaps by 3 to 4%, while HUL has increased up to 4%, and this is for certain SKUs in the Surf Excel Easy Wash brand, while Marico has been offering higher incentives as well, is what channel checks are suggesting. So this is for retailers, so that is very, very interesting. Now there's one very important point that we should not forget, that traditionally what happens is, when sector leaders, so big companies, HUL, etc., increase their trade margins, means they have increased by suppose 3 to 4%, then other mid-tier companies and other smaller companies of and peers will have to increase it by a higher margin. That is only because so that there's a lot of competitive intensity to match the products in the market. Other companies mid-tier companies would have to give higher trade margins. So that is something that we're surely going to keep an eye out for, and understand if there is some, point coming in over there for mid-tier companies. What is their increase also coming in, trade margin increases coming in, or what are their offers that they're going to be offering? This is something very interesting, and these are the points that we're going to watch out for, other than, the current data points that we're seeing on the trade margin front.